Hey, everybody. Hope you're doing well. It's Mark Yagi. Welcome to another weekly market pulse. Today is what are we, the 7th of February? Hope you had a great week. We are still in a green market, so that's kind of cool. And I hope you're making money. If that's what the point is, then I hope you're hitting the point. But like I said, it's a green market. So let me show you what we got going on. I'll be fast today, I promise. Okay. Um, so here's what we got. So we've got this market is three greens, okay, and one red light. So we're still red, sorry, we're still green, but we're just slightly turning a little bit. Now, this is a long in the tooth kind of a green trend that we've been in. So, if I were starting a new position today, I wouldn't start a full new position today. I'd start a partial position because this market now has a tendency to kind of roll over when we least expect it. Still green, so that's not a reason to sell anything, but it's just not a reason at the end of a green to act like it's like you would at the beginning of a green market. All right, so let's take a look. Here's the NASDAQ weekly. You can see there's a little consolidation going on, and that's why we're not really able to really punch through with some, four green lights. You can see the daily is kind of around the 50-day moving average. It's kind of not showing huge amounts of trending upwards or downwards. It's around the 50. The same thing with the S&P, a little stronger above the 50, and then you got the Dow even stronger yet above the 50, but nothing here at all-time highs. So that's why we've got, three green lights and one red light. So, but still bullish, just not like gung-ho bullish, right? Same thing with the New York Stock Exchange. Had a nice bounce off the 50-day moving average last week, and here we are, kind of right at those highs right before it went into that little bounce. The volatility index is on the downside, which is good. The lower the volatility index, the more people are like, okay, let me push a little money into the market. So that's good. Let's talk about some of the stocks that I know a lot of you are interested in. And these are kind of the stocks that are the bellwethers, right? If we watch them, whether we're invested in them or not, they kind of give us an idea of what the market is like. That's why I do a lot of these stocks every week. Plus, a lot of the people in my mastermind group are in some of these stocks. And so, it's important that we talk about them. But look at Apple from this 260, it's been trending down, really lousy, right? All the way down to 219.38, where it was just about to hit the 200-day moving average, and we had a bounce. That's healthy. But it went up to the 50-day moving average and it bounced down on volume at earnings. That's unhealthy. So now here we are in this limbo period between the 50 and the 200-day moving average. Got to watch that, right? Apple, to me, I don't see a world without Apple. So maybe you look at it as a buying opportunity. I don't see it as a buying opportunity yet. I think we need to have a little bit of uptrending volume. So I think that's the reason that's what I would use as an excuse to get back in. But if you want to get in, sell covered calls, make some income, Apple's a fine stock. Speaking of covered calls, excuse me, if you sell the stock is at 229.59 on this screenshot. If you go to the 230s, just slightly out of the money, just slightly, you pick up $293 a contract. If you could do that over and over again, there's this covered call return, gives you 64% in a year, but you're really after that $293 a contract. 10 contracts, you're talking about $2,900 a week. This is a weekly call, expires in 7 days. Okay, Tesla had numbers last week. Not, didn't really blow anybody away. Not a lot of good stuff going on at Tesla. They just reported some lousy numbers out of Germany. People are not real happy with Teslas these days, or Elon Musk, or both. But this has happened so many times in Tesla's past that could it be a reason to buy? I don't know. But this is not a good looking trend, even though we have a nice high relative strength. So it depends on how you look at it. To me, we're in a short-term downtrend, long-term uptrend on Tesla. So this is a buying opportunity for most people if that's the way you look at it. Tesla has, pays a little bit more money, almost $1,000 a contract. Right there, it's 369, 370. It's $1,082 a contract. You got 100 shares or 1,000 shares of Tesla. You're talking about $11,000 of income every week just on the juice. So, good stuff going on in Tesla. And if it happens to catch a bid down here, maybe we get a nice little bounce to the upside. Right now, not looking great, but right now doesn't just make the whole story either. NVIDIA had a big gap down here a couple weeks ago on that DeepSeek news. I suspect that the DeepSeek news is out of the market these days. I think there's going to be competition for NVIDIA. They had to know it was coming. That's probably why the stock is bouncing back above the 50-day, 200-day moving average. It hasn't tested it on this chart at all. So it's stocks are bound to test their 200-day moving averages once or twice every 12 to 18 months. This hasn't tested it at all. Here it is testing it successfully with 4 up days in a row above the 200-day moving average now. So even though the relative strength was kind of going down, still at 87 is very not bad. So NVIDIA is good. But look, it doesn't pay a huge amount of juice, $327 a contract, but it's a third the price of Tesla. And so you're talking about, at the 129s, you're talking about this thing bringing in $342 a contract. The covered return, if you could do that over and over again, is 134% a year, which is not bad. That's making a lot of assumptions. All right, couple of quick ones. I know a lot of you like MicroStrategy. You used to love MicroStrategy. You're probably in the camp of liking it now because it's below the 50-day moving average. And I always say not a lot of good things happen below the 50-day moving average. They had earnings. It was basically a non-event. The stock didn't even do anything after earnings. But here we are below the 50-day moving average, and it needs some volume to get back up above that before it makes me a huge believer, at least in the short term. I love MicroStrategy long term, so I can't say anything negative about it because I love the strategy of the new name of the company is Strategy. So Strategy is doing some good strategy. And you can look at the covered call returns. It's $1,420 a contract, 214% if you do it right at the money or just slightly out of the money. What's that? Yeah, out of the money. It's right around 30.35. So at the money. So pretty good stuff. All right, couple more. Amazon getting crushed today, down 877 when I printed this, down 3%. I think there's a sales warning or a growth warning or something. But it's Amazon. I don't see a world without Amazon. It's just you need to heed the warning, and it's probably going to test that 50-day moving average as the first test with the 216 well within range of testing that swing point as well. Okay, Microsoft. I don't think Microsoft's doing anything good at all these days. They can't get out of their own way. Look at the jumbled, crappy looking chart on this thing. It's totally sideways. Great cash flow machine stock because it makes you a couple of percent a week. But boy, like you got to watch out for a downtrend developing here. Or could it be consolidation, just in this area? Maybe. But I just don't like this chart. You can look at it. You can see it looks different than every other chart I just showed you. It's all over the place, right? Google's starting to look like it's Microsoft soon, but gap down a couple days ago on earnings. Probably wants to head and fill in this gap here at 180 before it maybe fills that gap. I don't know. I don't see a lot of good stuff going on with Alpha, but I don't see a lot of bad stuff going on with it either. Bottom line is this market is not as green as it was a couple of weeks ago when I said it's a green market. That was the time to buy. It's been green for a couple of weeks, and if you've been able to catch that trend, congratulations. Awesome. You've been making some money. But now I think we're at the end of that. I don't know. I don't have anything empirical to show you, except that we're just not making new highs. And when you get a market that just wants to go higher, but it can't, it kind of puts up a question mark for me. So just be careful out there. That's all. Keep making money. Hope you're doing well. And I hope you have a fantastic weekend. Thanks for joining me here on the Market Pulse. If you like what we're doing and you're watching me on Rumble or YouTube, give me a like or a subscribe or whatever. And tell your friends or whatever. But if not, have a great weekend. And I'll see you on the next Market Pulse. Take care.